You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's find out together. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating network upon which so many of you have been binging of late. Keep it up. We don't mind. We pay the bandwidth bills. We like y'all out there. If you're listening on demand, all we ask that you keep rating and reviewing, keep the new folks discovering this content. There are a legion of new traders entering the market every day. They need a place to turn, so rating and reviewing on the on-demand platforms does help. Of course, if you need more content in your lives, you want to go above and beyond, you want to get options oddities after this show today, you want to get the pro Q&A sessions, great ones. We had a great one again this week, more coming up next week, and everything else we do, including access to all the lives. You want to pick the brains of all of our guests and all of our hosts throughout the week on every show that we do. TheOptionsInsider.com/pro is the place to go. And of course, let's see who's joining us on the old program today. First, we're going back down to the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How go things in the Southern Volatility Mecca, sir?
It's beautiful here. Weather's great. Couldn't ask for more. What a great day.
Yeah, it was in like the 30s again when we got back from Florida. But I hear a rumor it's going to be like 75 or 80 tomorrow. So we're getting back to that zone. So that should be nice. That should be nice.
That will be nice.
A little flavor of Austin.
Good for you.
Not the 100 and stuff that you guys get, but a taste of it nonetheless. And then also joining us, I hear a rumor this was the guy heckling me at my panel this week, Mr. Matt McFarland, the derivatives product and business development specialist over there at MIAX. Matt, welcome back to the show. And why'd you have to heckle me during my panel, sir?
Hey, thanks. Well, glad to be back, Mark. I did catch some of your panel at the conference, the Security Traders Association of Chicago conference earlier this week. You did a great job leading that panel. There's a lot of interesting discussion topics. I promise I was not heckling, despite, a desire to do so, I resisted the urge.
And I can handle the heckling. The tomatoes I thought were a bit much. It was a brand new suit after all. And now, I have to go to the dry cleaning. So I did not appreciate that. Yeah, I was surprised at the turnout. For the first in-person stack in quite some time, there was standing room only in the back for the options panels. That was good to see. Folks want to come out and talk about their options, as we want to talk about a little bit of volatility. So let's get to it.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from all trading and trending analysis and all sorts of fun perspectives. Maybe not quite as fun today if you're leaning on the bullish tip out there, because we are seeing yet another aggressively red session here. And so far, at least, no signs of the turnaround we've seen of late, where, maybe we start the day red and then we start turning around. The bulls get in there. They start to digging their horns in. Next thing you know, we're turning green. Doesn't seem that way today, listeners. Earnings, Ukraine, a bunch of things weighing on the markets continuously. Coming into showtime, S&P off nearly 2%, about 1.8%. The Dow and the NASDAQ off similar percentages, about 1.7% each. So S&P actually leading the charge to the dark side, which is a fairly infrequent occurrence out there. Of course, all that red on the index screen means our vol friends getting a little bit firmer, a little bit frothier since our last show, which, remember, listeners, was 2 weeks ago now. So we have a lot of vol living to catch up on now. Again, we were closed last week for the Good Friday holiday there. So spikes coming into showtime. Quite a big move from our last show, up 5 points, back to 26. So that puts it north of the 25 threshold, listeners. You know what that might mean. And VIX cash, as we kicked off the show, 25.65. That puts it up a little over 5, about 5.15 points from where it was this time last week. So, I don't know. That might mean we might have a visit from a special guest star here throughout the show, as we are hanging out in some pretty lofty areas from a vol perspective again. VVIX, our old friend, at about a 116. That puts it up 6 points from this time last week. And the Viking, a.k.a. V-Spikes, at about almost a 143, about 142.70, actually down a little bit, down about 2.3 points from where it was this time last show. So let's go around the horn. We'll start with Mr. Meatball. First, Mr. Meatball, I have the question I know a lot of our listeners have been waiting for. Should we have the return of our special guest star now that we are back north of the 25 handle in VIX and Spikes?
Who's our special guest star?
Do you want to go to the danger zone?
Oh, of course.
Of course. Of course, the answer to that is yes. Of course. So I will busy myself readying our guest star. He's in the green room while you regale us with some volatility magic, sir.
Yeah, wow. What a last couple of days. Boy, VIX got below 20 yesterday, and it's now trading above 26. Just an incredible move. We had a 100-point range yesterday, and today we're down 80. The S&P looks like it wants to at least hit 4,300. Might blow through that level. We could see some selling into the close. There is just a lot of downside pressure on vol. You're not on the S&P. You're not getting a massive move out of the VIX futures. Part of that being because we have seen a pretty nice contango already. And so they had a lot of room VIX had a lot of room to rally. That's partly why you're not seeing just a crazy move. Although, UVIX is up 11%, UVXY up 8.7. VXX, reasons why, if you're going to be short, that's the one to be short. Because it's so broken, it's only up 2.7% when VIXY, which is not broken and contains the same portfolio, is up 6%. So, folks, the ugliness abounds in the market right now, and I think that we could see some real pressure here on vol, and into the weekend. I don't know that I'd want to go in long a lot. Again, we're still only $400 off the all-time high. That's not a huge amount of money. If I'm long and I need the money, I can see why people would want to not own anything right now.
Yeah, these are definitely difficult waters to come in as a hardcore bull and just buy. And you're right, given all these headlines, how often have we been talking about red days in the market for the better part of the last month? Quite a few of them. And yet, we're still north of 4,300. I mean, these are still extremely lofty levels. People forget. Just on election day, we were 3,300. So that's 1,000 points in the S&P. That's a lot of living. So there is some wiggle room to the downside. I don't want to spook anybody, but if they do decide to go that way, there is some room. So certainly I can understand why folks want to keep their powder dry. Mr. Matt, same question for you, sir. While you were busy throwing tomatoes, what's been lighting up your tape in the world of volatility?
Yeah, a few things I'd like to point out. One, the last time I was on the show, it was back in early March. And Spikes back then was 32 handle, but SPY was 432. So, here we are today, Spikes with the 20, nearly 26, SPY pretty much at the same level. So when I started looking at this earlier in the week, I was like, well, SPY's pretty much at the same level. But earlier this week, Spikes was, 20 handle on Wednesday, 22 handle yesterday. I was thinking, why is there so much more complacency in the market today than there was 6-7 weeks ago? It really didn't seem like there should be. And indeed, what we are witnessing today seems to be an indication of that, with a pretty sharp move higher in volatility. But, your show's been, you touched upon a lot about what's going on in VXX with with VXX trading at a significant premium to net asset value, and with the inability of Barclays to create more shares. But I think what's really striking is, the amount of shares trading per day of VXX is way, way, way down. So, before the halt of new issues of shares, VXX shares are trading about 75 million shares per day. Since then, it's about 5 million shares today. So way, way, way lower in ADV for the VIX shares themselves. But the impact that that's having on the entire vol derivatives complex is striking. So there's a lot of vol, VXX versus vol futures activity versus VIX futures and Spikes futures. That is weighing on that. It's weighing on Spikes options and VIX options and VIX ETP option flow. So I think that this is a temporary thing, that this will, the market will sort this out, either through, VXX starting to issue new shares, or, just the market tying its strategies to other ETFs. And it will find a home either in the ProShares ETFs or the volatility shares ETFs, or some other ETFs that are new products that might come out. Other thing of note that I've been watching is relative value volatility. So you look at S&P vol, whether that's in the form of Spikes or in the form of VIX, as it compares to European vol in the form of V2X or the V stocks. So V stocks is based on the Euro stocks 50 options, and it's trading at a significant premium to S&P vol, about a 5-point premium, and probably appropriately given the geographic proximity of V stocks to the Ukrainian situation. But I don't know that it's that S&P vol should be trading at such a discount, because that's although there's a geographic there's literally an ocean between us, we're all pretty globally aligned, so that's perhaps a hefty premium. But the good thing is that, we've got SPIX futures and options, VIX futures and options, VSTOXX futures and options that allow market participants to express a view on these dynamics.
Yeah, we haven't talked VSTOXX in a while. It does seem like VSTOXX comes into the crosshairs, Matt, whenever Putin starts acting up, right? The last time we really had a lot of interest in VSTOXX was back in the Crimea issues of, around 2014. And that's the last time I remember everyone really asking us about VSTOXX, and now people are suddenly interested in VSTOXX again. Go figure. When they want that European exposure, when things start popping off in that network or that region of the world out there. Since you're talking futures, Matt, you are a futures guy. Let's stick our nose in over there, see what's going on. Obviously, since our last show, the April future has rolled off the board. Remember that whole funky expiration everyone was all freaked out about there. April gone. May is now the front contract in VIX land. That's up about 1.6 points from this time last week, and June is at up about 1.4 points. So both of them up similar levels out there. I'm looking right now, we're not quite at backward yet, but hey, the day is young, so we shall see. Mr. Meatball, what's lighting up your tape out there in the volatility term structure, sir?
Yeah, it is. I gotta say, it's definitely moved around. VIX, like as I stated, was in a nice contango all the way through, and now the cash index is basically trading on top of that front month future. The curve itself is still in contango, but relatively flat. So we're getting right at the point where things start to either the market says, hey, this is stretched enough, and they buy it, or the market completely falls apart. We're right at that junction right now. So it should be interesting, to say the least.
We're at that inflection point, you say, sir, where the worm can turn at any moment.
Yes.
And we do see
either
that.
We pop or we really drop.
Well, the volatility surface is usually a good place to see that kind of stuff. You start seeing that old backwardation start creeping in, listeners, things are getting frothy. The game is afoot out there. Mr. Matt, when you're not busy throwing tomatoes at me, you're out there looking at all things futures. First off, what are your thoughts on the volatility surface and what Mark was just saying, that we're maybe hovering at that inflection point? And then B, if you have any thoughts on what you're seeing, what's going on in the land of SPIX futures, have at it, sir.
Yeah, SPIX term structure, like VIX futures term structure, moving towards backwardation. Wouldn't be surprised to see us in backwardation by the end of the day if this sell-off in the market continues. In the SPIX futures market, as you mentioned, we did have an expiration earlier this week on Wednesday. It was another smooth expiration for SPIX futures and options. When we look at expirations, what we want is ultimately a print that is really, closely aligned to where the prevailing volatility is in the market. So SPIX on Wednesday settled at 20.03. The first print of the SPIX index itself was 20.14. So very, very closely aligned to where the prevailing vol in the market was. And that's been a consistent theme from month to month for SPIX futures and options settlement. So, and that's important for the product's development, because what market participants want to see is that we're having smooth, fast, consistent settlements that are in line with the prevailing volatility, and that certainly was the case on Wednesday and has been the case for several months running. The SPIX futures market in general, it continues to trade really well. We're averaging about 2,100 contracts per day, which is off a little bit from what we were seeing earlier in the year. But I do think that VXX phenomenon that I was describing earlier is a factor in our market, as well as in VIX futures as well. There's a lot of strategies that are arbing futures against ETPs. So volume's a little bit off in that regard, but market quality remains fantastic. One tick wide markets, over 100 contracts up on the front month, even deeper markets on the second month. So we're really, really pleased with market quality. And that market quality is maintaining itself even as vol is moving higher. So that's a great thing to see as well.
It is indeed, as we keep on rolling out there to the land of the vol options. And they're still waiting for the four-way friend in Spikes to make his return. He had a pretty decent exit the last time. So, of course, we are starting to get to those levels again where maybe he wants to consider, maybe he wanted to do it a little earlier, but he likes to be biased towards the upside. So maybe he missed his window. Mr. Tom, I'm curious for you. You keep an eye on the options when you're not looking. Excuse me, Mr. Matt. You keep an eye on the options when you're not looking at the future. Is anything catching your eye out there in the land of Spikes options, sir?
Yeah, our four-way guy has been quiet lately, although he, as you said, he seemed to time it pretty well last time he was in the market. But what we've been seeing in Spikes options is really just some smaller retail type of flow, and really just basic strategies, just some small upside call buying. In May, we've seen, the 35s, the 37.5s, the 40, the 45s, and the 50 calls trading small. And this is good stuff to see. I mean, this is just, basic vol product utility where, it appears that retail customers are hedging downside, hedging exposure to the market and buying some upside calls that will benefit with a down move like we're experiencing today. And that's the type of activity that we're trying to foster in the Spikes options market and expect to grow amongst the retail community as the product evolves and matures.
Indeed, always good to see. Like the four-way, like the big stuff, that's always fun to talk about on the show, but a product needs a healthy ecosystem of 1 lot and 5 lot and 10 lot people as well. I'm glad to see those folks are making their way into Spikes. Let's see what's making its way into VIX options. Not as much as you might think, given what I said earlier in the show, listeners. We usually have a pretty classic setup for a pretty decent VIX options day right now. We probably should be pretty close to our ADV, if not threatening it at this point, and they're not, and that's surprising because the ADV in VIX has come off quite a bit since our last show. It's down to 456,000 contracts. That's down 85,000 contracts from our last show. So that's a big hit in ADV, and VIX still not really threatening right now. Only 275,000 contracts on the tape. Now, I say only in air quotes. It's obviously a decent amount of paper, but we have seen VIX do more than that on much less of a sell-off of late, which again also points to the fact that the market, you start seeing these shocks regularly, then they start to adjust. You don't see maybe the initial flurries of paper that you might see if we had been hanging out green for the last couple of weeks, and all of a sudden, bam, we turned to the dark side for 2%. So that's kind of where we're hanging out right now. Not the busiest of days out there, which is interesting. What is interesting, though, is looking at the top 10 positions out there in VIX land right now, because you've been listening to the show for a while, listeners. Traditionally, outside of this mad pandemic era, VIX is predominantly a call-dominated product. That's where folks go to play. That's where they hang out in VIX options and in Spikes as well. And for a long time, that wasn't the case. The top 10 was mostly puts, dominated by puts, sometimes all puts, which is kind of weird, kind of strange. We kind of got used to it as the pandemic rolled on and people were expecting those elevated levels of vol to come in. Where we're hanging out right now, though, listeners, perhaps indicative of what's afoot out there right now. A little bit more vol on the screen. We are seeing 9-1 calls over puts back in the top 10. This is like an old school VIX top 10 here. I haven't seen this in quite some time. There's only one put to be found in the top 10. So read into that what you will, listeners. Only cost you 105,000 contracts to break into the top 10 in VIX right now. That isn't a lot. That gets you to the AUG 75s, in fact. If we adjust this top 10 to take out the, shall we say, optimistic strikes, you only have like 3 or 4 real quote-unquote strikes here in the top 10, which also is fascinating in and of itself. So number 10, AUG 75s, 105,000 of those bad boys. We were joking about this kind of paper before our panel this week, listeners, and just how much paper is going up, not just in 75s, but pars and 120s, and how it's kind of the new rage out there in VIX land. Number 9, 107,000 contracts of our first and only put in the top 10 this week, the June 21 puts. Dare I say it, a somewhat relevant strike? Wow, how crazy. Number 8, 108,000 of the July 75s. Here we go. Back to the upside. Number 7, 110,000 of the May 75s. Think someone has an axe to grind, listeners? Number 6, 111,000 of the June 70s. Number 5, here we are, back to, dare I say it, a near at-the-money strike. 112,000 of the May 25s. Then here we go back up again. Number 4, 125,000 of the Nov 70s. Oh, then back down. Number 3, 140,000 of the May 30s. And then number 2, $1.53 of the May 35. So a few, dare I say it, relevant strikes sneaking in there. Number 1 with the bullet, you know what it is. It hasn't changed. This person has not taken it off. Maybe he's waiting for this move here. We shall see. There's still about 250,000 of these OX 75s hanging out there. Remember, you put them on a while ago as part of that funky 1x5 out there. And we thought the last time we saw VIX pop into that close to 30 into 30 range, we thought, okay, this guy might want to start taking some stuff off. He said no thanks. So he's obviously keeping his powder dry for perhaps a little bit more aggressive move to the upside. We shall see what he does. That'll be an interesting indicator when this person starts taking off this, shall we say, optimistic upside. Mr. Meatball, interesting. First off, the fact that we're back to 9-1 calls over puts in the top 10. We haven't seen that in some time. And then B, it's almost all of these, shall we say, outrageous call strikes. So what's catching your eye out here, sir?
Yeah, I'm shocked at the lack of volume today. Just absolutely nothing trading. Biggest trade of the day so far is about, a $6,700, they did, 15,000 risk reversals. That's it. And you're right. These way out of the money calls, they are not taking them off yet. I keep waiting for them to do something. That will be, I think, a good sign. But maybe things that make you go, people might have already been positioned for this, and now they're just sitting back and waiting and watching. And the fact that we're not seeing hedges come off, that should tell you some about the way this move is perceived. It is definitely I think, interesting the way that everything is going down. I'm wondering whether there's another leg down here. So
certainly seems like our 1x5 guy is thinking that. He hasn't taken anything off yet. Of course, we were joking before our panel as well about our old friend 50 Cent and wondering what he's up to these days if we'll ever see him again in the VIX upside. He did pretty well last time, at least on the VIX leg. Obviously, he had some other legs of his portfolio, credit and otherwise, that maybe not as well. But still, the VIX option side, you can't fault him for that. He took him off almost at the apex. It was pretty well done. So maybe we'll see a return of that type of paper. We shall see. Meanwhile, you mentioned not a lot of paper this week. We'll break it down really quickly here, then move on into the ever-growing land of the VIX ETPs, listeners. Today, like we mentioned, not a lot of paper. 275,000 contracts. The big prints right now. May 20 puts, about 28,000 of those. And the May 35s, 27,000 of those. And 20,000 of the May 22 puts. Oh, someone's sneaking in 12,000 of the AUG 75s. So still some crazy upside action, and 11,000 of the July 60s. So it's not all relevant strikes. Yesterday, 509,000 contracts total. 38,000 of the May 35s, followed by 27,000 of the DEES 85s. What is afoot here with this upside? We've seen this before in fits and starts. We didn't see. This is a lot of it, listeners. This is like every day. Top 10, all this, just nonstop with this stuff. 22,000 of the May 22 puts, 18,000 of the June 21 puts, and then rounding us out on Thursday, 17,500 of the AUG 75s again. Wednesday, 464,000 contracts. The number one trade, 31,000 of the June 60s. Here we go again. 25,000 of the May 25s, 24,000 of the May 23 puts, and then 23,000 of the June 70s. Tuesday, a little bit more action, 632,000 contracts. Looks like that was the most active day of the week, at least so far. Today, we still don't know, a mystery. The big day there, actually, here's a put strike, and a relevant one. The April 21 puts, 76,000 of those going up on Tuesday, obviously heading into April, going the way of the dodo. 34,000 of the April 22 puts, and 27,000 of the April 23 puts. A Monday, pretty light day, pretty anemic, actually. Only 328,000 contracts on the tape. The big dogs, take a guess. You take 21,000 of the July 60s, you're the winner chicken dinner. And then followed hot on its heels by 21,000 as well of the AUG doubles, the 55s. Man, this used to be considered the outlandish paper. Now it's just daily paper in VIX. What do you think of these strikes? We were joking about these with the Oracle of New Hampshire on advisor's option. He'll be back again. We'll be doing advisor's option again next week, listeners. He's kind of taking a shine to some of these far out of there, like 110s, 120s, as a bit of kind of that funky tail risk play. I know he likes those garbage puts in S&P as well, so they kind of function in a similar purpose. Obviously, you have to be very judicious on when you take them off. Obviously, you don't need a pop to 110 or even close to that to make these things work, but it's interesting to see just how many firms and funds seem to be on that crazy upside train right now. Intriguing stuff. Let's get on out to the ever-expanding land of VIX ETPs. And Matt, this is the first time you've joined us since we've had our latest additions to the volatility trading world here. Of course, I'm talking about SVIX, the inverse VIX product, as well as UVIX, the 2X levered VIX product. I'm curious for your thoughts on these, Matt. What are your thoughts on, the fact that we have effectively an XIV? XIV is back in a modern wrapper here for 2022. And then also your thoughts on UVIX, sir.
Yeah, I'm really happy, glad that UVIX and SVIX are out there. I think the market terribly missed XIV and TVIX. There was so much. There's so many people out there loved XIV and TVIX, and I'm glad that this iteration of 1x short and 2x long is a different iteration. It's a iteration with more appropriate rebalancing. It's an ETF wrapper rather than an ETN wrapper, and I think that's a more appropriate wrapper. It's a more transparent wrapper. So I think it's fantastic. These things are back in the market. But of course, these are complex products, and I would caution folks about trading them and encourage folks to read the prospectuses because they're complex. They move fast, and you got to know what you're trading.
Were you surprised? I mean, we mentioned this on the panel this week. These are still somewhat contentious products, particularly SVIX. Were you surprised? It seemed like a lot of people in the business were. Were you surprised that we got a effectively new version of XIV approved by the regulators?
Yeah, and I think it was a long approval process for them, and I think they had to demonstrate to the regulator that this is not going to be XIV 2.0. And I think they were able to convince the regulator that their rebalance methodology is going to ensure that this isn't XIV 2.0. But yeah, I mean, I like to have people have instruments that allow them to express a view, and this allows people to simply express a short volatility position. Certainly a lot of risk in expressing that view, but providing people with the tools to express that view, let's go for it. Let's just make sure that people are aware of the risks and are appropriately educated about the product before they get engaged in the product.
Yeah, we had an interesting conversation on the panel this week about that exact topic, but whether a product like SVIX, we should apply options approval levels to them or some gating to keep your random grandmother from Iowa from wandering into it the way clearly a lot of them did with XIV. More than you would think, listeners. We saw the feedback after that melted down in 2018. I was amazed. I think a lot of brokers and other people were amazed too, just how many people were in XIV who clearly never should have been anywhere near it. So probably a better job could be done there with the new flavor, which is SVIX. If you want to check out that panel, we're working on trying to get it to you, listeners. It was kind of fun, so stay tuned. Hopefully, fingers crossed, maybe we can make that happen for you. SVIX right now, the infamous XVIX, was at about a 13 when we kicked off the show. That puts it down a little over 1, about 1.4 points from where it was. And it's a little bit below that now. It's down about 1.5 points, and now we're around 1290 here. Talking volume, not talking a heck of a lot yet. We're at about 118 contracts ADV in SVIX. So for all the all the noise it's making, all the controversy and everything else, and people like us talking about it, it's not really translating into a lot of paper yet, which was surprising given the fact that they listed the options pretty much as fast as they did with BITO, right? They had these options up and running almost before the ink was dry on launching the ETF. So, yeah, it's interesting to see that folks talking about it, not really trading it up yet, at least from an options perspective. Mr. Meatball, any further thoughts here? By the way, if you're wondering what the top trades in SVIX today, 136 of the May 15s. That's the big print out there today. And then 91 of the May 11 puts. So there you go. Mr. Meatball, we have another couple of weeks under our belt in SVIX land. Any thoughts there, sir?
Yeah, the volume has really, really ticked up over the last couple of days. The volume in SVIX and UVIX are both approaching 1 million shares a day. That's a really big threshold. I'm looking today, and yeah, I mean, they're active. Let me get the stats up for you. On the day, the volume is over 700,000 already today in SVIX. That's pretty good. I think it's going to break 1 million today. Not a lot of options trading yet, but definitely busy. UVIX, which is blowing higher, already at 836,000. So these two are at, it's going to break 1 million today. And I think that you're going to start seeing some serious trading action in these. I'm looking, and a customer did sweep in and buy the May 16-18 call spread today. So we're definitely seeing some real activity here, and we could see we could see these products really start to blow up. I am of the ilk that UVIX is going to steal a lot of UVXY's thunder, and frankly, I don't know why you would even want to trade SVXY. It's done 4 million shares today. I don't know why you'd want to be involved in that one if you can trade SVIX, which is going to give you kind of much more the return you're looking for if you want to be short vol.
I know in the past you were saying you think UVIX is going to steal the thunder of SVIX. Sounds like you're still on that train, sir.
100%. 100%. Right, we are going to see that happen. UVXY is going to take a little longer than SVIX taking over from SVXY, but both are going to happen.
Yeah, SVXY can probably finally go the way of the dodo, the way maybe it should have a while. I washed my hands of that one after the great neutering, have never returned since. So, it's an interesting one out there. Let's keep looking. Speaking of interesting, well, first let's go to UVIX, and the one Mr. Meatball is loving. It was at about a 1770 when we kicked off the show. I don't have where it was last time. This is the first time we've had it in our tracking, so we'll let you know from here. It's actually up a little bit now. It's up to almost 18 right now, so it has ticked up a little bit, hence that levered 2x action. Speaking of action, we're getting a little bit more paper out here in UVIX than SVIX from an options perspective. Not a ton more, but it's talking 120 roughly ADV versus 620, so decent clip more, but still both of them in the very anemic early phases of their options trading. Looks like the big print out here today in UVIX are the May 15s, 213 of those. So May 15s in both of them, actually, were in SVIX and UVIX. That's interesting. Same option in both. Intriguing. Getting on out to the product Matt was just talking about earlier in the show, the much maligned VXX. Man, what even is this thing anymore is a good question. It was at about a 26 when we kicked off the show. That puts it up 2.25 from where it was last show. So at least it's back in pretending to track mode. That's something. Today, in terms of volume, we're seeing a little bit more paper on the tape today as well, which is kind of the first time in a while we've seen VXX actually do some numbers. We're at about 155,000 contracts right now. That's well north of the ADV, because the ADV, as Matt was talking about with the underlying, the same thing with the options. The ADV has just fallen off a cliff. It is down to 126,000. That is down 102,000 contracts from our last show. It was round or north of close, threatening 300,000 not too long ago. So this ADV has pretty much just fallen off a cliff out here in VXX, and for obvious reasons. No one wants to touch this thing because they don't know what the hell it is anymore, and they're not really getting clear guidance from Barclays on when it will become itself again, if ever. So, yeah, it's kind of this weird quasi-neutered, quasi-closed-end fund now. It's a weird beast. Looking at top positions, let's just do a quick top 5 out here so we can keep on rolling, because I know not a lot of you are slinging VXX anymore. 20,000 of the May 20 puts for number 5. Number 4, 21,000 of the June 17 puts. Number 3, 21,000 as well of the May 21 puts. Number 2, 50K of the April 18 puts. And number 1 out there with a decent-sized bullet, about 80,000 of the May 18 puts. So it's like folks are still trying to play the downside game in VXX. Doesn't seem like that's been working out too well for the last month, as this thing has kind of become its own beast. It's not doing the downside dance it used to. So I'm going to guess a lot of this paper is vestigial from a few months back, and they haven't really taken it off. They haven't had an opportunity, and it does seem like the VXX gods are taking a lot of those puts to the woodshed, and that might be the case again here. Mr. Meatball, what are your thoughts here on VXX, if you have any, and then looks like the continued presence of a lot of puts that are, if past is prologue, going to go out worthless, sir?
Yeah, I mean, a lot of people are banking on Barclays coming out and saying, hey, we're going to reissue shares. They said they wanted to. They have not yet. And when that happens, we expect this thing to start trading like it used to. And you will see this thing, I think, fall off a cliff and go back to NAV. And when that is why you're seeing people play this. They are thinking that it's going to return to its NAV, which last I checked puts it probably somewhere in between 22 and 23. But that is what I think everyone is looking to do.
You're right. If you do get that announcement from Barclays, then some of these put holders are going to be very happy. I know you were playing in some put flies. Is that still the case out there?
Yes, it is. Absolutely. Long at like the 24 and the 25 strike, and short at the 20s and 21s.
Speaking of puts, those seem to be the order of the day out there again today. The May 18 puts putting up another 30,000 contracts today. So what little paper there is does seem like it's still hanging out in the puts. 24,000 the May 17 puts, 24,000 as well the May 16 puts. What do you folks think, listeners? You guys giving up on VXX? Are you like the Meatball? Maybe you got some out of the money downside waiting for that moment to happen where Barclays comes out and says, hey, we're playing again. And then this thing kind of just gets clipped. Are you out there playing? What are you up to out here in VXX? Hit us up, let us know as we keep on rolling out to UVXY. Man, this vol ETP space just growing by the day out here, listeners. It was at about a 14.25 when we kicked off the show. That puts it up 1.5 points. It was threatening the 12 handle not too long ago, listeners. This thing has moved a wee bit in the last few sessions. It's actually a little higher now, about 14.35. So that puts it up about 1.65 points from where it was a couple of weeks ago. Seeing some decent paper out there in UVXY, unlike its VXX brethren out there. The ADV has ticked up, so it's up to about 250,000 contracts in UVXY right now. So that's nothing to sneeze at out there. And it looks like today we've got a fair clip on the tape as well, a little over 300,000. Actually, no, that's ticked up. When we started the show, it was 315,000. UVXY is now up to 491,000. My goodness, UVXY on the rampage. Apparently, some folks were waiting for this thing to pop a bit, or they're scrambling to get out of some puts. Oh, wow. Wow, someone's got an axe to grind on the 13 halves going out today. 153,000 of the April 13 halves have traded today. My goodness, that's only 100,000 less than the ADV listeners. Wow, looks like they're all over the place too. So wow, it's not just one person coming in and scooping a bunch. Maybe they had some and they're taking the heck out of the dodge. They're taking their opportunity to get some profits because these were not looking good. A couple of sessions. That's UVXY. It is so expiration sensitive. All that matters is the kind of those moves in the last day or two, and it can be heartbreaking. We got April 14s doing 27,000, but the big dog out here, my goodness, 153,000 of the April 13 halves. Mr. Meatball, what are your thoughts on UVXY catching a bit of a wind again and someone trading up a storm in these April 13 halves, sir?
Yeah, it is flying. It's been moving. It's at a new, it's at a new week high. Seems to have really found a nice little bid here. VIX futures are strong, so not surprised to see the volume here in UVXY. Yeah, they love those April. They really love those April 13.5 calls, and so far so good for them if they went long. The 14s and the 14.5s also seeing a little action. Next week's options are really moving too. Little aspirational, but pretty heavy trading on the 17 calls. We could get there, but you're going to need a lot of messiness to get there. And, a little surprised, but we're not seeing any of those really crazy call buys out in some of the long term, although I do see 1,500 of the June 35 calls. To get to $35, oh boy, that's going to be ugly. Those have been trading, and we've got some, a little bit of action in the least, but really out to June is about as far as any of the action goes.
Yeah, you're right. The crazy upside folks have not invaded UVXY, probably for obvious reasons. We have seen some of those in the past. A lot of those were sellers on like the 70 and 75 strikes, which is an interesting trade as well. Not seeing a lot of those right now. It's all 13 halves. It is amazing just how much living you could do in UVXY just in the final 24 hours before expiration. It just makes or breaks so many people in this product. It's crazy. How many times have we Jan expiration? How many times have we seen UVXY just move and break hearts right on expiration day? It's a rough product, but it can be a good one. But yeah, just buckle up if you trade in UVXY, listeners, because days like today, as you can see, craziness afoot. There's some craziness afoot out there on the earnings front as well. Obviously, Netflix made all the headlines this week, just getting annihilated, taking a lot of other fellow streamers with it, like Disney and others. So wearing on the markets this week as well. We've hit on the earnings vol a few times already on the option block and others. Kind of come up against it, so we won't squeeze a lot of it in here. If you want more earnings vol, including a full breakdown, all the trades, all the season, all that stuff, I'll be joined by Mr. Matt, the creator of all these reports, next week on the Advisors Option. We'll go deep into all this goodness. I will give you a quick update on where the season stands right now. And spoiler alert, listeners, so far, it ain't that great. We're at 59%. But again, that's only 49 firms that have been analyzed so far. So we got a long way to go. So don't read too much into that. But right now, 59%. So looking pretty light. There are some new earnings trades for you guys to follow. If you're not checking out the earnings trades report, you're missing out. There are two new short straddles in there in SAP and SAM. And then we've got, it looks like a whole bunch of other trades that they're still tracking. 43 long straddles, 21 short straddles, and 53 long calendars. So if you want to see where things are lining up, that's all there on the website for your reading pleasure. Meanwhile, speaking of reading, we love to read your questions. Let's get to those now. A little bit of the old Vol voicemail. Oh, we have to bid adieu to our guest star. Thank you for joining us once again, Mr. Loggins. I think we all hope we won't need you again, but I think we all know we probably will. So we'll see you next time, Mr. Loggins.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Also like to go out to our chat. You guys chatting it up about SVIX and UVIX. Like to see that. Some of you saying you're enjoying lunch with Volatility Views. Yeah, we'd love to have you come join us on your lunch hour there. Always fun there. And also have some good questions. Let's really quickly run through our polls and we'll get to the questions. This week, we're asking you, we asked you about a month ago, actually 2 months ago, what's going to be the impact of this Ukraine thing. A lot of you guys were fading it. That turned out, obviously, to not be the right play. So we asked you again, what are you thinking this time in terms of time frame for the impact of the war in Ukraine? Give you 4 choices between 1 and 3 months, between 3 and 6 months, between 6 months and a year, and over a year. Mr. Matt, we'll start with you. What is your vote, if you have one? And B, more importantly, what do you think our audience is voting for?
The impact of the Ukraine, short-lived versus long-lived. I think this is something that it's going to be a persistent theme in our markets for some time to come. I would be in the 6 months to 1 year camp.
Okay, interesting. Mr. Meatball, same question for you, sir. Which way you lean and which way you think our audience is leaning?
Yeah, I mean, I think that it's going to be this is going to be a drawn out process, and the damage that's been done to oil, just the permanent damage to the oil markets on their own is going to be enough to, I think, keep things kind of ugly. So I think we're talking over a year.
You think our audience is heading that way too?
Yeah, I do.
Yeah. This is quite the swing for our audience, from like 73% saying it's going to be over in a few weeks to now, if you add them all up, 59% saying over 6 months. Because right now, over a year is winning with 39%, and then 20%, which are between 6 months and a year. So it's quite the shift out there. 25% saying between 3 to 6 months, and about 15.6% being optimistic, saying less than 3 months. I hope you folks are right. The cynic in me says probably the majority of our audience is actually on the correct path. Doesn't seem like things are letting up over there anytime soon. We also asked you guys last week, 2 weeks ago during the show, we said we gave you a flash poll. Should we apply options approval levels to SVIX traders as well? And yes, took it. I was surprised. 54.5% saying yes, 45.5% saying no. So yeah, our audience even realizing maybe we need to pump the brakes a little bit on some of these new products out here, which is what I mean when I always say they are contentious. Speaking of new products, we also asked you guys last week, a bunch of new products hitting the tape. Which one are you most excited about? SVIX, UVIX, the CME Micro, Bitcoin, or ETH options, or the nanos on SPX. And there weren't many votes for nanos on SPX until right at the end when a whole bunch of votes came in for it, and it took it with 31.4%. So the nanos defense force picked up on the poll, apparently. And then number 2, 25.7% for the Micro, Bitcoin, and ETH options. Number 3, 22.9% for UVIX, and only 20%. So number 4, fourth place for SVIX. That kind of surprised me, but maybe that gives credence to what Mr. Meatball was saying about UVIX maybe trumping SVIX out there. We got this question from the chat here from Age of Delaquarius. He says, doesn't VIXY still send out K1 forms and is structured like a limited partnership? Makes it a mess for retail. Yeah, Mr. Meatball, this is always a sticking point for a lot of traders who are out there slinging a lot of these products. They forget. Sometimes I forget. I'm like, wait a minute, what's this K1? Oh, yeah, crap. So, Mr. Meatball, we have to say for VIXY and K1 forms, sir.
Oh, I forgot they have K1 forms. Yeah, that's a tax thing. I don't mind K1s. I already get a bunch. So, what's one more to me? But yeah, if you're not, that's one of the nice things with the options. You don't have to deal with the K1s. If you're if you trade in and out of the options, you don't take delivery. So that's another reason to love options.
And not let your options go to expiration.
Yes.
Every once in a while, when I do that, maybe I take whatever it is, and I end up regretting it the next year when I have to do the tax. I'm like, oh, crap, I got the stupid K1. I keep forgetting about it. So, yeah, you are correct, Age. So a lot of these vol products, caveat emptor in these things, because there are tax consequences you may not be aware of. Some of these ETNs also have issues around them, with the way they're structured. So, yeah, it's a whole bunch of fun out there for everybody. Speaking of a whole bunch of fun, that's a great way to describe the crystal ball. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get difficult, we get dangerous. And last time on the show, it was myself and the Meatball and Jim Carroll and Tom from MIAX. And we had quite the diversity of opinions. I was leaning more vol, like I usually am, but I was actually eclipsed by Mr. Jim Carroll. He wanted more upside. He said 25 in VIX and a 26 in spikes. He was closer than a lot of us. He was definitely closer in spikes. Spikes at end of the show, 26.85. VIX around 26.5. So he's certainly the closest amongst us. And if we give him his 26 level, just make that his pick, he's within half a point. So that's not bad. Not within our 10th of a point margin of victory, but closer than the rest of us. I was at 23.78. I thought I was kind of feeling lofty because that was much higher than we were, listeners. But nay, we blew right past me. Mr. Meatball was behind me at 22.22. He said 19.19 for last week, 22.22 for this week. So no joy there. And Tom brought up the rear at 20.2. He was feeling the fade. So I guess that goes to the guest, which is you this week, Mr. Matt, even though your buddy Tom kind of dropped the ball there. What are you feeling for this time next week in spikes, sir?
Yeah, I think next week, a week from now, in spikes will probably be. I think a lot of the move is happening today, but I do think that the prospect of higher rates, the continuation of the Ukrainian situation, the earnings aren't off to a great start, so there's going to be a continued bid to vol, but I think a lot of it has been experienced already today. So I think we will be pretty close to the levels that we're at right now, but maybe just slightly lower because the market will have time to absorb what's going on today. So I'm going to call about 25, spot 25.
25 for you, Mr. Matt. Okay, interesting. So I'm looking over while you're talking, looking over a bunch of the listener submissions. Seeing we had some people leaning higher. Frank was only at a 24. Unlimited was at a 25. We had 23 and 3/4. Well, that's right. Luigi scummed me. I forgot. Queen, Athena, a bunch of them here. Our producers will go through all of them, listeners. I'm looking at, they kind of surfaced up some of the closest ones for me here. And yeah, I don't see anybody even with a 26 handle. The highest handle we have is a 25. So it doesn't seem like we had any winner chicken dinners this week. But our producers will go through and check all the submissions, listeners. Make sure we're not leaving you out there high and dry. You got to get them in by the end of the day today. You can't be sending them in over the weekend or next week. That's not fair to everybody who plays during the show. All right, and then I was next closest, so I guess I will go next. I will give the meatball the pride of place of going last. How nice am I? So yeah, so we're at almost a 27 in spikes right now, 26 and a half or so in VIX cash. So we're feeling frothy. Conventional wisdom would say kind of what Matt is saying, a little bit less vol, but still kind of frothy. I don't know. I'm feeling a little bit of churn, a little bit of juice out here. We could have more days of red ahead of us next week. Again, the question is, where are we going to be at the end of the show, right? So I'm going to say higher. I'm going to say 28.75 for this time next week. All right, Mr. Meatball, what you got? You got 3.5 points between me and Matt. Or you're going to go wild and crazy?
Well, like I said, I think we're going to be higher early in the week, but I think they're going to fade you by the end of the week.
Yeah, that's always the case, right? I'm right, and then they take it away on like Thursday and Fridays. That's the challenge. Yeah.
So I'm going to say 22 for the meatball. Yet again, that's his number du jour. So there's your market, listeners, for next week. 22 on the dark side. Matt bringing up the middle at 25.25, and myself playing the upside game there again, 28.75. What are your prognostications? I don't know if I don't see Luigi in there, so he can't scum me this week, so I'm safe. But we shall see. Before we go, let's go around the horn. Let's start with Mr. Meatball, sir. If folks want to reach out to you and see what's going on in the land of the pit, where should they go? What should they do? Go to optionpit.com and read my VIXY blog every day. I'm writing on VIX. I'm writing on the vol products. I'm writing on spikes. You want to know how volatility works, how to make money, how to trade it. That is the place to go. It is the best written content that you're going to find on the web on volatility.
Optionpit.com is the place to go. Mr. Matt, where should folks go if they want to learn more about all things spikes, sir?
The place to go to learn about all things spikes, MIAXoptions.com/spikes. Tons of information for you about spikes futures, spikes options, historical data on the spikes index itself. So lots of information for you. MIAXoptions.com/spikes.
Yeah, check it out if you haven't in a while, listeners. Got quick strike links up there now, too, so you can get access to some of the cool quick skew and all the stuff we talk about on TWIFO. You can now do that with equities. How cool is that? You can find all of that at MIAXoptions.com/spikes, including links to a cool show called Volatility Views. What more could you possibly ask for from a vol-oriented destination? For all of our on-demand folks, this will conclude our broadcast week. I want to thank you for joining us throughout the week on all of our shows here. For all of our cool cats, though, in the secret club, stay tuned. We'll be back in a little less than an hour now to break down the mad, crazy world of options, unusual activity on Options Oddity. Should be a fun one. Stay tuned. And then stay safe out there, everybody else. We'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.